Ladies and gentlemen, good day and welcome to Q1 FY24 earnings conference call of KIMS Hospitals, hosted by IIFL Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Jivani from IIFL Securities. Thank you, and over to you.
Good morning, everyone. I am Rahul from IIFL Institutional Equities. I welcome you all to the Q1 earnings conference call of KIMS Hospitals. From KIMS, we have with us Dr. Bhaskar Rao Bollineni, Founder and Managing Director, Dr. Abhinay Bollineni, Executive Director and CEO, and Mr. Sachin Salvi, CFO. Over to you, sir, for your opening comments.
Good morning, everybody. A warm welcome to each of you. Heavy rains and floods have battered many parts of our country, causing havoc. My heart goes out to those who suffered losses on account of nature's fury. KIMS is known for its clinical excellence and repeatedly demonstrated the same over the years. I would like to share with you few of the rare surgeries performed at our various centers that are primarily Tier 2 and Tier 3 towns. It is a matter of great pride that such rare procedures are undertaken at these relatively small towns, wherein previously patients were required to go to far-off cities involving heavy expenditure, loss of precious time, and severe strain on account of staying away from home. This phase marks an advancement in medical reach to population in urban and rural areas. Time is crucial in many cases, and few hours of delay can make the difference between life and death. I'm going to talk about few rare cases in our different hospitals in our group. In a first at Nagpur, doctors at KIMS Kingsway performed an awake bypass surgery on a 72-year-old man without administering general anesthesia. The patient was awake and talking during surgery. And one more 11-month Anushri was Central India's youngest cochlear implant recipient. The 11th-month-old had severe profound hearing loss at birth. She was gifted hearing capability through cochlear implants, a very advanced solution in hearing sciences by doctors at KIMS Kingsway, Nagpur. A baby born in the 7th month was cured of rare CMV infection after treatment for 90 days. He underwent multiple episodes of ventilatory days, lung infection and lung collapse, transfusion-related lung injury, feed intolerance, transient renal tubular acidosis, neonatal jaundice, low platelets. The doctor successfully treated the boy, who was discharged after 90 days of neonatal intensive care unit stay. Complex heart surgery. An emergency complex heart surgery within 30 hours of birth was performed successfully at KIMS Cuddles, Vizag. It was technically a big challenge for surgeons to perform such a surgery on a neonate whose tissues of the heart are very fragile and tender. Such feat is one of its kind in the history of Visakhapatnam. After 1 month of discharge, the child is gaining weight and spreading the joy. Kidney and liver transplant to same patient on the same day. A 50-year-old patient suffering from liver cancer and chronic kidney disease was given a new lease of life by doctors at KIMS Icon by transplanting both kidneys and liver. Availability of the state-of-the-art equipment and a dedicated team of doctors enabling the hospital to perform more and more organ transplant surgeries. Unedited cyst of the kidney is a very rare condition with incidence of 1 in 5 lakh population. The surgery is difficult because if the cyst gets ruptured and the contents spill, it can lead to immediate anaphylaxis and the patient can die on the table. The surgery was done free of cost under Arogyasri scheme at Anantapur. A 36-year-old woman from Maharashtra came to the hospital with a repeated shocks for ventricular fibrillation. That means it is a rapid heart rhythm leading to cardiac arrest. She would experience as many as 30 shocks in a single day. The doctors designed a special strategy and a 2-hour-long procedure was performed. The patient was able to walk on her own on the next day and she was discharged on the following day. The kidneys of a brain in a dead baby were transplanted successfully to a 60-year-old woman. This is the youngest kidneys of all time in KIMS history and a second such successful transplantation in Telangana and AP states. This is technically challenging in a view of pediatric donor. The extraordinary task could not have been possible but for the kindness and selflessness of the donor family. Their act of humanity exemplifies the power of organ donation and serves as a sterling inspiration. A complex pancreatic surgery was performed laparoscopically on a 49-year-old patient. It was done in a laparoscopic surgery known as the Whipple's procedure, where the incision is very small. It causes less pain and enables faster recovery. The patient recovered quickly and was discharged within 1 week. Due to its technical complexity and skill required, the procedure is done in a very few centers in Hyderabad. Better quality of life is also possible in these surgeries compared to open procedures. This has been done in KIMS Kondapur. The patient was suffering from a stiff neck and spine for over 5 years and was not able to walk erect and bend or sleep properly. A complex surgery called pedicle subtraction osteotomy lasting 8 hours was done by the doctors, and the patient at last is able to stand erect and regain his dignity. The deformity is gone. A 48-year-old woman came to the hospital complaining of severe pain in urinary bladder. There was a tumor and it tested benign. However, before the surgery could be performed, the tumor first slipped down and blocked the urethra. She stopped urinating. Immediate surgery was done and tumor was removed. When it was first sent for testing, it was found to be a rare type of inflammatory pseudotumor. It is a rare in medical history. There are only about 100 cases worldwide to data. Such a case was done in KIMS Hospital, Kurnool, successfully, and the patient was relieved. The doctors at KIMS Kurnool treated a 19-year-old boy who was suffering from rarest Norse disease, new onset refractory status epilepticus. It is a rare devastating condition that can abruptly occur in previously healthy people, mostly children. Awareness of this disease is very limited even among our medical community. The boy remained in the hospital for 6 weeks before he was treated and discharged. It's also performed in Kurnool. Doctors at KIMS Kurnool performed a complicated surgery on a 43-year-old woman having a tumor-like thing around her liver, which is called hemangioma in a medical parlance. There was swelling in the liver due to internal bleeding. To arrest further bleeding, all the blood vessels were blocked and next day surgery was done and tumor removed. It was done free of cost under Aarogyasri scheme, again from Kurnool Hospital. An 8-day-old baby successfully treated and discharged. A 8-day-old baby was put on peritoneal dialysis for 5 days continuously and successfully treated for renal failure and seizures. The baby was discharged after 21 days of NICU. The treatment was done free of cost under Aarogyasri scheme. Let me now present the financial highlights for Q1 FY23. Gross revenue at INR 609 crores, a growth of 21.6% on year-on-year and a 4.9% on a quarter-on-quarter basis. Operating EBITDA of INR 160 crore, an increase of 12.4% year-on-year and a decrease of 4.7% on quarter-on-quarter basis. EBITDA margin at 26.3% versus 28.5% in Q1 FY23 and 28.9% in Q4 FY23. PAT at INR 87 crores in Q1 financial year 24 against INR 79 crores and INR 99 crores in Q1 FY23 and Q4 FY23 respectively. Conducted 3.83 lakh OPD consultations in Q1 FY24 up by 18% and 4.4% year-on-year and quarter-on-quarter basis. Bed occupancy in Q1 FY24 at 70.4%, up by 5% on year-on-year and down by 0.4% on quarter-on-quarter basis. The average revenue per operating bed increased to INR 31,697 in quarter 1 FY24, showing a 5% growth year-on-year and a 3.7% growth in quarter-on-quarter basis. Cash and cash equivalents at INR 178 crores in quarter 1 financial year 24. Net debt to equity ratio at 0.22. Academics, I am happy to share with you that recently KIMS Hospital is accredited by American Accreditation Commission International for having demonstrated compliance with the international accreditation standards for excellence and patient safety. This is yet another feather in our cap as we dedicatedly continue our march in pursuit of excellence. The events, the conferences that we have done in KIMS, a 2-day annual conference of Indian Neurogastroenterology and Motility Association was hosted by KIMS on 29th April 2023, attended by several experts in the field from throughout the country. The Department of Clinical Immunology and Rheumatology, KIMS organized a Lupus Ramp Walk and Lupus Awareness Program on the World Lupus Day on 10th of May 2023, participated the local doctors and the patients who have been cured. An exclusive inflammatory bowel disease clinic is inaugurated at KIMS Secunderabad, and a workshop with wide participation was conducted on 27 April 2023, so that exclusively all the people who are suffering from inflammatory bowel disease will get benefit out of this. The Department of Interventional Pulmonology conducted a thoracoscopy concern with diabetic lectures and a hands-on workshop on 28th May 2023, so that with a minimal invasive we can able to treat without operations of all the lung conditions. Awards and honors. Dr. Raghuram, our breast cancer expert surgeon, was conferred honorary fellowship by American Surgical Association. This is the highest recognition from ASA, and there are only 99 honorary fellows from throughout the world under this. 2 studies of doctors in urogynecology department has been accepted for presentation at International Continence Society Annual Conference 2023 at Toronto. Our DNB students was awarded the Best Poster Award in Euro-Asia Critical Care Conference by the European Society for Critical Care. Our projects are moving at pace as per schedules. This quarter we launched an exclusive single specialty hospital for gastro sciences, went operation at Visakhapatnam, Andhra Pradesh. We launched KIMS Cuddles Mother and Child brand at Nagpur and Visakhapatnam, both the places. We have done well in Q1 and do hope the performance will be even better in the upcoming quarters. Winston Churchill said, "My tastes are simple. I am easily satisfied with the best." We at KIMS too are satisfied only with the best and best in all aspects to the patients and investors. Thank you for your continued trust and support. Open for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to only use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Dhara Patra from Smiths Limited. Please go ahead.
Yeah, thank you for the opportunity. So I have 2 questions. First is finance cost in this quarter has actually doubled. So what was the driver for this?
Thank you, Dara, for the question. So finance cost has doubled because we have drawn down from our limits for our sunshine units. That is one of the reasons.
Okay, so this will stay for the next few quarters, and we should assume the same run rate for the coming years onwards.
It depends upon the requirement, Dara. So there are two options available here. We can use our existing limits to spend on these capital expenditures, or we can draw from the available profits.
Okay. So next question was like the Telangana and AP cluster are pretty much stable and have an occupancy of around 80% level. So from where will the next leg of growth would come? I understand that we are doing expansion in other regions, but these will take time to scale up to a level, right? So if you could throw some light on this.
So there are, like we have always mentioned, if you look at our Telangana and Andhra cluster, even this year-on-year basis, we have grown at a revenue at 15%. So there is still more opportunity in the same Andhra and Telangana cluster by adding new specialties like oncology, mother and child, and many more interventional procedures which will drive growth. So we don't see that Andhra and Telangana are fully saturated. There is a lot of opportunity in our existing hospitals by adding these new specialties to be able to see growth. And also there is a lot of margin expansion opportunity in the Andhra Pradesh cluster. If you look at Telangana, it is at 31%, whereas in Andhra it is still at 22%. There is an opportunity for us to improve that by at least 4 to 5% over a period of time. Likewise, there is also opportunity for us to grow Sunshine Hospital, which we recently acquired a while ago. But given there is some delay in the movement into the new facility, there is delay in ramp up. But once that happens, there is more opportunity for growth there as well.
So what I understand is the next level of growth, majorly in Telangana and AP, would come from ARPOB, right? If we are adding more specialties, it would fetch more ARPOB. So will the occupancy go to like 80, 85, 90%, or at occupancy of 80%, we can expect some improvement in ARPOB going forward?
So there is a lot of bed capacity addition that we're also doing in Andhra and Telangana. We're adding close to 1,500 beds over the next 24-36 months to accommodate the growth that is happening in this market, plus to introduce a lot of new specialties. So with that incremental beds, we will still be maintaining at around 70-75% kind of an occupancy.
Okay. So just one last question. Recently, some north-based players, they have said that the industry is facing some challenge on the staffing and nursing side, like due to some scarcity of human resources. Since we are mostly based in South India, so are we facing any such issue or challenge? Any color on that would be helpful.
So there has been a constant challenge on nursing staff and paramedical for a long period of time. It's not something new. It's been there for a long period. So we are trying to solve that by setting up our own nursing colleges, tying up with reputed nursing colleges to source staff. So I don't think it's something that is worrying us at this point in time, but the long-term solution is to increase the number of nursing colleges and bring more people into the system.
Okay, that's it from my side. Thank you.
Thank you. We have a next question from the line of Rishabh Sisodia from Samiksha Capital. Please go ahead.
Yeah, hello. Hi, sir. Thank you for the opportunity. Am I audible?
Yeah, you're audible.
First of all, congrats on a good set of numbers. I have a few questions, sir. So first on the AP assets that we have combined from this quarter, the reporting. So if I compare it on a like-to-like basis on a rough calculation, so I find there is the margin improvement has slightly slowed down. And is it also that because we added capacity in Vizag, if I'm not wrong, for gastro? Those are the reasons that is why we see the margin trajectory has slightly slowed down in the AP assets?
Yeah, that's the reason why because of the bed capacity addition in Vizag, the new gastro unit, which will be a bit negative for this financial year and should be turning positive towards the end of the year. That's why there is a drag.
Okay. If I look at it on a total cluster basis on the overall hospital space, so our ARPP has almost grown 3% quarter on quarter. So how much of this would be because of price hike and other difference would be because of change in mix and introducing more specialty? If you could give more color on that. And if I look at historic, so our orthopedics as a percentage of of total share has grown from 5% to 15% in the last 2 years. So any specific specialties that you are looking at that you want to grow those further? If you could get some sense.
Yes, in Andhra and Telangana, a significant growth in the future will come in from mother and child and oncology. But having said that, there is a lot of focus on pulmonology, gastroenterology, and few other services that we're trying to focus. But you will see the pie of mother and child and oncology expand in the Andhra and Telangana cluster. As far as orthopedic expansion, because we acquired Sunshine Hospitals, naturally because it's a very dominant orthopedic brand, the share of orthopedic revenue as a percentage of the overall revenue has increased. So far, there are 50% of the insurance renewals have happened in the last quarter, towards the end of last quarter. And we are expected to complete the rest of them towards the mid of quarter 2 or the beginning of quarter 3. That's the price impact that you could see. But we have not still done a cash price hike so far because we're pretty confident about growth in volume. We don't want to focus on doing a price hike at this point in time for the cash patients.
Okay. So just last one, if I can squeeze in. The Nagpur hospital, we are facing some doctor attrition over there. So has that issue been resolved? Have we added almost all the doctors that you said that we are adding in this year for this facility? And the margin expansion looks healthy on a sequential basis. So what is the trajectory over here and the same for Sunshine?
So, like I explained in my previous call, as far as Nagpur was concerned, there was not a significant attrition. We lost 2-3 doctors, but the problem there was a lot of insecurity among the doctors who were practicing. It was more to solve for that problem and stabilize the unit before we go out and acquire new doctors. It took us by the time we acquired it and set up our systems, it was November, December. We took good 6 months to stabilize internal processes to ensure that the doctors have more comfort with the management before we start introducing a lot of doctors. Having said that, I think we're pretty positive on how things have shaped up and the confidence level within the hospital. We have recently had one new doctor join us who's a very prominent cardiac surgeon and doing around 30 to 40 cardiac surgeries a month. So with him joining, there's a lot more confidence in the market. So we're anticipating a lot more new doctors to join us in the next 2 quarters. And once they do join us, we will start seeing an improvement in the revenue 2-3 quarters from there. And automatically, as a result of which, the EBITDA margins also will fall in place.
Sure, sir. Overall, doctor attrition on a combined company basis would be?
Less than 0.5%.
Senior doctors?
Less than 0.5%.
Okay, sir. Sure. That's it from my side. Thank you, sir. Thank you.
Thank you. We have our next question from the line of Nikhil Mathur from HDFC Mutual Fund. Please go ahead.
Hi. Good morning, everyone.
Hi, Nikhil.
Sir, hi. So my first question is on the margins for the different clusters. Andhra Pradesh, I understand that because of the gastro unit setup in Vizag, the margins have compressed YOY. But what is the problem in Telangana? Because if I look at on a Q&Q basis, the revenue is stable, but still the margins is down almost 4 percentage points.
Right. So as far as Telangana, Nikhil, we have invested a lot. So because our new expansion is happening and we're starting to acquire a lot of talent. So a lot of the corporate, actually all of the corporate cost is booked in the Telangana cluster. So the dip is largely one because of the corporate cost that got added in for the future expansion. Number 2, there is a seasonal variation in terms of the electricity cost going up in the first quarter, which is the usual trend across. And there is some high cost of consumables which have been used in this quarter because of the case mix change. So that is why the margin kind of went down from 35% from Q4 to 31% in Q1 of this year. But if you look at the full year of FY23, we were at 31%, which is in line with Q1.
Right. So, sir, this cost going up, is it more related to expansion or is it some sort of not abnormal but slightly higher inflationary pressures that the hospital space is starting to see a bit?
Not really, because the revenue growth has been quite healthy. So I think the growth in revenue will take care of the growth in costs that happen on a year-on-year basis. It is largely towards the expansion of new hospitals. There is a seasonal impact. Usually, if you look at historically, all our Q1s have always had compressed EBITDA margins when compared to the rest of the year. So that's the impact.
Right. Secondly, sir, can you revisit some of the expansion initiatives? I know you talk about that in your Concalls a lot. I can always revisit my notes from last quarter, but it would be helpful if you can revisit most of the expansion initiatives.
Sure. Other than the ones that are currently operational, right? Are you referring to those?
So Nagpur Sunshine, I can see you disclose it separately, but apart from that, Bangalore, Thane, and all those, what are the number of beds and timelines we are looking at?
Sure. So we're talking about 2 hospitals in Bangalore, combined bed strength of 750 beds, both of which should be operational in quarter 2 of next financial year, between quarter 1 and quarter 2 of next financial year. The total outlay for both the projects in Bangalore will be around 650 crores, that is around 80 lakhs per bed. And both of them should be operational 1-2 months apart from each other. So as far as Bangalore, we're pretty much on track in getting these facilities operational. As far as Thane, we've started work. We have, like we mentioned in the previous call, we are looking to bring an investor. We have signed an SPA with the investor. We're looking to close the transaction in the next 15 days. When I say close the transaction, we're talking about transferring the money to Vikiranandani's to completely acquire the asset. The work on site has already started. So by the end of first quarter next financial year, we should hopefully have that operational as well. Nashik is something that will be operational by Q4 of this financial year or early Q1 of the next financial year. So these are the 4 projects that we have currently, which are going to be operational in the next 12 to 18 months. And then beyond this, we have expansion that's happening in Andhra, which is adding oncology centers across 5 of our 7 facilities, adding mother and child in 5 of our 7 facilities. And then you have the Kondapur expansion, which is an incremental 400 beds, which is slated to begin 2 years from today. That's about the expansion.
Okay. So, sir, we are roughly adding almost 1,700 to 1,800 beds by end of FY25, right?
FY25, yes, we should be adding. Correct, you're right.
And these would be capacity beds, so operational beds would be more like 1,300, 1,400.
Correct. A little lesser because in the first year we may not even operationalize more than 40% of the beds.
Okay. So, sir, if I look at your console EBITDA per bed today, it is somewhere around 25 lakhs. I know there are some underutilized assets like Sunshine, Nagpur, where the cost will still be pretty high versus the revenue generation. But if I, let's say, were to do a rough math of these incremental beds in FY27 or FY28, what kind of EBITDA per bed should we be looking at? Should we be benchmarking these newer assets to, let's say, a mature center like mature cluster like like Telangana or Telangana or somewhere in between? So any indication of EBITDA per bed of these incremental capacities in FY27-28 would be very helpful.
How we typically look at it is, Nikhil, Telangana, whatever incremental revenue comes in, we should assume 40% of that will straight away flow to EBITDA. As far as Andhra, it's the same, but I think there is the potential EBITDA margin that we can reach in Andhra is around 25 to 27, anywhere between 25 to 27%. As far as Sunshine, we will be in line with how we are achieving things at Telangana in Telangana KIMS. We will get to a 30% margin over the next 24 months. And then from then on, whatever incremental revenue comes in, 40% of that will flow through. As far as Nagpur is concerned in Maharashtra, given that the cost structure is slightly higher than Telangana in other expenses, we believe that 25-27% EBITDA margin is what is doable at this point in time. But as we scale, there is potential for the margin to expand as well. And since a lot of the beds are getting added to our Telangana and Andhra cluster, in the not in the next 12 months, but beyond, a lot of the beds are getting added to the Andhra and Telangana cluster. You will see a lot of these incremental beds. Even there, 40% of the revenue growth will flow into the EBITDA.
Okay, sure. And so one final question. Now, couple of North-based hospitals have reported this quarter, and you have also reported. It seems there seems to be a bit.
Sorry, Nikhil, we lost you.
Sorry, we lost his connection. We'll take the next question from the line of Diresh Pathak from White Oak. Please go ahead.
Yeah, thank you. So, you said the Telangana cluster, the EBITDA is lower because there is higher cost of goods and there is corporate overheads. So I would suggest that
Could you repeat the question, please? Your voice is very feeble. Could you please repeat the question?
Yes. Is it better now, sir?
Yeah, slightly better, yes.
Okay. So sorry about that. So if I understand correctly, you said that in the Telangana cluster, the main cluster, the EBITDA is lower because there is corporate overheads and higher cost of goods sold. So, and I'm referring mainly sequentially because the revenue is similar, but the EBITDA is lower by about 13 odd crores. So the question is that how much of this is drag from higher corporate overheads as you are building capabilities and capacities for expanding into newer markets? And it will be better if you can unallocated corporate overheads, if you can put it in a separate bucket altogether, so that at least we get a true picture of the Telangana cluster.
Yeah, we'll do that. I think from next presentation we'll put all the corporate cost, unallocated corporate cost into a different segment. But at this point in time, you should assume 50% of the dip in margin is because of the corporate cost, and the remaining 50% is because of growth in cost of consumables and some seasonal variation, because during summers the electricity costs are much higher in Q1.
Okay, understood. And on Sunshine, this maybe I'm not able to recollect properly, but on the numbers it seems that the ramp up is not that much. Like for the last 3-4 quarters,
right.
The occupied beds seem to be in that same range. Revenue seems to be similar, 110 crores. Although margin profile has improved. So what is the right path for scaling up of the asset?
Right. So Sunshine has 2 facilities, one in Begumpet and one in Gachibowli. Gachibowli, like I mentioned in the past, it took us 1 year to get rid of few of the high cost doctors and then start onboarding doctors at an optimum cost. We have finished almost all the onboarding except for 1 or 2 doctors. In my previous quarter, I mentioned there were 5-6 doctors pending. Most of them have joined. Now just 1 or 2 are left. So we have, in the month of July and in the month of August, we are seeing a good improvement in the revenue. I think it will get reflected in Q2 performance. So we believe over the next 24-36 months, Gachibowli will hit a 70% occupancy. All the doctors for us to be able to achieve that are more or less in place. And the EBITDA margin correction is also is done. So whatever incremental revenue happens in Gachibowli, almost 50% of that will flow straight to EBITDA. There is one other contract that needs to be that will end in October at Sunshine Hospitals, which is a contract with a third-party diagnostic vendor, where we're losing close to 2-3% margin because of that outsourced element. That contract ends in the month of October. After that contract ends, there is an opportunity for the margin to further expand. As far as Begumpet is concerned, whatever margin correction we could do, we did. And the reason we have not been able to scale that hospital is only because of the poor infrastructure that it currently has. Once we move to the new facility, I think then we have already identified a key departments that we want to add and key doctors that we want to onboard. So with moving to the new facility, we will start seeing growth happening there. And as we speak right now, we are actually moving we're starting OPD on August 9th, and we will move completely into the new facility in the next 30-35 days. So from Q3 and Q4, you will start seeing a lot of growth in both revenue growth in Sunshine Hospitals other than the margin growth.
Understood. Okay. And in Bangalore, when you said, can you refresh the asset status, like 650 crores, 80 lakh per bed? Are we owning the real estate or we are leasing it? If you could just explain that again on the 2 assets in Bangalore.
So one asset we own 50% of the land and building. The remaining 50% is on lease. The other asset is on a revenue share model, where we bring in medical equipment and parts of the interiors. A cost is what we incur, and rest of it is on a revenue share model.
Okay. Thank you so much for taking it.
Thank you. We have a question from the line of Nikhil Mathur from HDFC Mutual Fund. Please go ahead, sir. Mr. Nikhil Mathur, your line is unmuted. Please go ahead. Since there is no response, we'll move on to the next question from the line of Sagar Shah from Phillip Capital PCG. Please go ahead.
Yeah. Good morning, sir. And first of all, congratulations for a healthy set of numbers. Now I have just few questions actually on this. First of all, my first question was related to your Sunshine Hospital. Sunshine Hospital, we are facing almost delay in shifting our Secunderabad hospital, and finally, as you have said, we are moving in the Q2 FY24. So first of all, you have already mentioned the key drivers behind the improvement in margins and occupancy and everything. But I wanted to understand that basically, apart from this, will you be adding other specialties in this year itself to maybe to improve your occupancy at these levels? And secondly, also Nagpur, what are the key strategies apart from hiring doctors that you are going to do to actually achieve scale in these two hospitals, which are actually one of the biggest growth drivers for us in the next 2 years? That is my first question.
Is concerned, Gachibowli, we have more or less concluded on the clinical specialties, the talent they've joined. It's more or less in place except for 1 or 2 specialties, which we will fix soon. Begumpet, if you look at the revenue today, 70% of the revenue comes from 2 departments, which is orthopedics and cardiac, which is usually not the case for KIM. It is quite spread out, and we don't have more than 10% of the revenue coming in from any one specialty. But having said that, given the dominance of orthopedics there, it's very difficult to bring it down to 10%. We believe it will continue to have a significant share, but the aspiration is to see how we can bring it down to maybe 35% versus the current 55%. And yes, the idea is to bring in a lot more specialties or a lot more doctors in the current specialties that exist, strengthen them further. Same as the strategy with Nagpur. I think the current set of doctors are extremely talented and very good. It's just that typically any hospital of 350 beds, 400 beds, you need close to 70-80 doctors to ramp up the hospital. That hospital currently has only 30-35 full-time doctors. The more doctors that we bring in, the incremental revenue will flow in. But before you bring in more doctors, you need to make sure that the current doctors are very secure about their position. They are feeling confident that the management is only trying to grow it and not trying to trying to create insecurity in the hospital. So that is what we have established. And once we bring in these incremental 25-30 doctors, I'm sure the revenue will start flowing in.
Okay. So basically, in the last quarter, once you had said that in the Begumpet hospital, we were facing the doctors weren't ready to join actually. Something like in the Begumpet hospital. Hasn't the issue resolved?
No. So Sunshine has 2 facilities. So the current facility is a very old facility, and we cannot do much beyond operational efficiency, which we have already completed. Now, what we are trying to do is when we move to the new facility, because of the size of the new facility, the main road presence of the facility and new infrastructure, a lot of doctors are showing interest to join. But the old facility, no one is willing to join. No big doctors are willing to join. That's the concern.
Okay. Got your answer. So now my final question was regarding to your expansion actually. In your expansion, if I'm not wrong, we are planning for 3 hospitals. The first one is Bangalore, the second one is the Nashik, and the third one is the Thane project, which you haven't declared still on both actually. So basically, I wanted to understand, in the last quarter already you mentioned that the Thane project, that you'll be giving the project to Viranjali Builders, and the CapEx will be around 400 crores. Correct me if I'm wrong. So that is on course. So something like, will there be only oncology specialty there, or have you changed the strategy? What can you give certain numbers? What is the bed capacity would be there over there?
So that is a 300-bedded hospital. It will be a multi-specialty hospital. Unlike our other facilities where we've always added oncology later, here we will have oncology from day one. So it is going to be like any other KIMS hospital with oncology on day one, focusing on all specialties including transplant.
That will be the capacity, right?
Mr. Shah, I request you to join back the queue, sir.
Okay, sure.
Thank you. We have our next question from the line of Ashish Thaukar from 361 AMC. Please go ahead.
Yeah, hi, thanks. Just wanted to ask this, Mr. Rao's investment in Somdat Financials, if you guys could provide some color around that, would be helpful.
Basically, this is an NBFC we have been taken for one of my cousins, and because he is a young guy to grow, and second important thing, he cannot able to acquire this because of his financial status and other things. My involvement in that is not there at all, except because to get the permissions from the SEBI and the Reserve Bank, and I have little say in that, and even my time investment in that is absolutely zero. It is only to help that person, and once it has been established, and I know there is a lot of regulatory things when compared to the hospitals NBFC has, but we are going to put the total completely professionals on that. They will run on their own. Maybe over a period of time, once it is established on its own, I may be able to step out of that as a director also in that.
Yeah, okay. So this clarifies a lot of things. Thank you so much. So secondly on this, so you mentioned about RPOPs, right? So you aim to be around 70-75% of the occupancies, but as far as the RPOPs are concerned, so this time around it was 5% YY growth. On a longer term basis, or at least in the near term FY24, what kind of RPOP growth are we building in?
Yeah, our RPOP growth can happen because of case mix change or price change. We are not focusing on increasing prices to the customer, especially in cash patients. We are adding a lot of new clinical therapies, which the RPOP of those clinical therapies are in line with what we are currently doing. So we should expect maybe around a blended 3 to 5%. Historically, that's how it has moved.
Yeah, and this also includes the pricing benefits, the government laying out new price stack. So it includes all those things, right?
Correct.
Okay, fair enough. And so in the longer run, so I guess as far as FY24 is concerned, so this fiscal there are no issues, but since most of the capex starts hitting from next fiscal onwards, so how do we see? Are we confident of maintaining EBITDA margin upwards of 25%, or you feel at least for that one particular year where 40% of the beds will get operational, margins could come down below 25%? Is that a fair assessment?
Yeah, so I think the way to read it will be better if you can read it from a cluster point of view. New facilities will keep coming, the turnaround of that will happen. But as long as the other clusters that are already mature or are maturing are showing a progressive trend, I don't think one should really look at it at a console level, is my understanding. But having said that, given the base of the current revenue and EBITDA is so high that the incremental beds may not have a significant impact on the EBITDA margin, because there will be growth in Sunshine and Nagpur, which will set off the EBITDA loss that we will incur from the new facilities.
Fair enough. And Sunshine will get operational from next quarter onwards, right? Or as we are speaking, is it operational already?
What are you referring to? Sorry, could you come again?
The Sunshine one, the new asset.
No, from 10th of August, we're trying to move our OPD services, that is day after tomorrow. And over the next 35-40 days, we will shift all the IPD as well.
Okay, perfect. This helps. Thank you so much.
Thank you. We have our next question from the line of Harsh Bhatia from Bandhan Mutual Fund. Please go ahead.
Yeah, hi, Dr. Abhinay. Good morning. Just 2 or 3 quick questions from my side.
Sure.
One is in terms of the mother and child care aspect that we are trying to bring in the AP and Telangana markets. If you could help us understand the initiatives in terms of the outreach, the awareness, because from an outsider, the patient pool is very different from the multi-specialty business and the pediatric specialty business. So one would be in terms of your outreach and awareness, the initiatives that we are taking. How are we looking at the overall market dynamics for this particular segment? And lastly, in terms of the talent pool availability in terms of specialty pediatricians, let's say an onco-pediatrician or a neuro-pediatrician, your thoughts would be helpful.
Sure. So I think we have successfully done one hospital at Kondapur, which is Cuddles, which is part of our Kondapur hospital. In fact, today in that micro market, in a 10-kilometer radius, that is the largest mother and child hospital, and we've been able to do that in just 4-5 years, in spite of dominant standalone mother and child brands being there. Now after seeing the success there, we're looking to expand those services to our rest of our hospitals. And I think the formula we followed there was very simple to what we do in our adult hospital. We bring in the right clinical talent, who have some of whom who have practices, some of whom who have great clinical capabilities to showcase. So we continue to bring and acquire these clinical practices, which are probably today in standalone hospitals or in nursing homes, who are willing to consolidate and move to larger facilities. That's how we're trying to focus and build our obstetric and pediatric brand. And once we have the right clinical talent, I think branding and awareness is not going to play as much as a significant role as much as acquiring the right clinical talent. And that's what we have historically demonstrated, and we believe is what will be helpful to grow the business.
Sure. Would it be right to say that doctor for specialty pediatric care would have or would not have any overlap with the multi-specialty business that you're already doing, the multi-specialty services that you're already providing? So the medical department would be entirely different in that sense.
Yeah, so neonatology is absolutely different. There is no overlap. Pediatrics also, up to a certain age group, up to 11 years, there is no overlap. But there could be some overlap between the age group of 11 to 16, where, historically they have probably been going to adult specialties. Now, because we are also offering a larger pediatric service and pediatric subspecializations and super specialty, there are chances that there could be that overlap in that age group. But otherwise, there will not be a significant overlap.
Right. And lastly, I missed your earlier comment in terms of the price hike. So you're saying cash not taken any price hike, but insurance is where we are taking some bit of price hike. But would you be able to quantify what would be the blended price hikes for this quarter on the YoY basis?
Sorry, how much is the impact of price hike?
Yeah, blended price hikes on a year-on-year basis.
So on this quarter, we would have had a 3 crore impact on because of price hike from insurance companies and CGHS price hike that happened for the full quarter. But given that it happened in the middle of the quarter, we should take 1.5 crore for this year, for this quarter.
All right, sir. Thank you.
Thank you. We have our next question from the line of Rishabh Sisodia from Samiksha Capital. Please go ahead.
Hi, sir. Thank you for the follow-up. Just a small detail on the payer mix. So our government share has been reducing. It has reached close to 7%. So is there anything specific we are doing in the government share mix, or how has the margin and the data profile moved after the last price hikes taken by ECGS?
So we have not done anything deliberate to reduce the government scheme patients. I think the growth has largely happened in cash and insurance, and that's why the percentage things are changing. But there is continuous effort and effort to treat all sorts of patients, whether it's cash, insurance, or scheme patients. There's no deliberate effort that we have taken so far.
So we are not obligated to take any specific government patient to fill up a quota or anything. Is that in any of our hospitals?
None of our hospitals are obligated to do such.
Okay, sir. And as you mentioned in one of your comments that you are looking at, adding colleges. So all of that is on the promoter entity. How is that?
So I think whenever the current hospitals, we have sufficient nursing pool and paramedical pool. But moving forward, wherever we're setting up hospitals, like in Bangalore, in Thane, and so on and so forth, it makes sense because these are all long-term assets to also have nursing schools associated with the hospitals, and it will be part of that entity itself.
So we'll be having nursing schools within these spaces, right?
Yeah. Not in the campus, maybe in that geography.
Okay, and that would be part of our own books, right?
No, I think what we have done is we are already having 5-6 nursing schools, and moving forward, every hospital do require a nursing school and a nursing college and paramedical courses. That's why we created a 100% subsidiary of KIMS Education. There is a KIMS Education Society we have been created. This society is going to run all those schools and all. We will utilize those people into KIMS hospitals. As a regulatory body that we cannot run nursing schools and colleges in the corporate hospital. So that's why we created this KIMS Education Society. That is an independent body, nothing to do with KIMS. But only thing is those nursing students will come to our hospitals to get trained. In turn, we can able to absorb them once they finish their course, and they'll stay post their course for 2 years, and then there will not be any issue as the nursing attrition is concerned.
Okay, sir. Thank you. That's it from my side. Thanks.
Thank you. We have our next question from the line of Alankar Garude from Kotak. Please go ahead.
Hi, good morning, everyone. Sir, firstly, on Sunshine, we have seen a sequential improvement in this quarter. And now in the second quarter, as you said, August OPD, and then in the next 30-35 days, we'll be starting operations. And maybe we'll have the full year impact or the full impact of the doctor additions in the third quarter, and hence the duplication of cost. So overall, should we expect a meaningful dip in the Sunshine margins from the current 23% over the next 2 quarters, and after which we should see an expansion? So just wanted your thoughts on both the near-term trajectory as well as how should we look at margins for Sunshine in FY25?
So for a quarter, Alankar, there will be an impact because we will be paying rent on both facilities. We will be maintaining both the facilities for around 45-60 days. And after that, like you rightly said, we will be onboarding doctors. So the next 2 quarters will be tricky, but I don't think we are hopeful that we will not see any significant margin dip. But after the 2 quarters, maybe from Q4 or Q1 of next year, we will start seeing a significant growth in revenue and margin improvement. And from then on, in the next 4 to 6 quarters, it should be in line with our KIMS Telangana cluster.
Understood. The second question is on Nashik. Broadly similar question. Now, you mentioned about 25 to 27% margins at peak. Currently, we are at 6%. So how should we look at this journey now that the current doctor setup is stabilized? It's more of a question of adding further doctors and specialties. So is it something which can be done in the next 2.5 years, or could possibly take longer?
No, I think, so Alankar, there are 3 things that we need to fix in Nagpur. One is on the cost side and one is on the revenue side. As far as cost is concerned, consumables have been addressed to a large extent. We had seen 4-5% improvement in the consumable cost itself. Doctor cost, we have taken action. Part of the action is still left because The doctors believe that if time is given to them, they will start performing and the minimum guarantee will get compensated. That's a time-consuming process. Over the next 6 months, we will know which direction that is going. If they are not performing, then their minimum guarantees will be reduced. If they are performing, then it will get compensated. And the other cost is largely on the nursing cost, which is currently significantly high in Nagpur and I think in general in Maharashtra. So we are using our nursing colleges, nursing schools in different parts of Andhra and Telangana to source a lot of these nurses and put them there. And this is going to take time because it is, attrition needs to play its role, and then we are able to bring in these new nurses, onboard these new nurses at a much lower cost, delivering the same care. So this is initiatives that we need to address on the cost. On the revenue side, like I said, most of the onboarding, at least 70% of the onboarding should be completed over the next 3 quarters. And then from there, in 3 to 4 quarters, you will start seeing significant improvement in revenue. We have already started seeing a good improvement in revenue in the in the July and August months. So that is after having 2-3 doctors on board. But I'm sure given more and more doctors on board, the confidence in the local market, confidence in the hospital will only go up, and then we'll start seeing an improvement trajectory. By end of the financial year, we should see at least 60-70% of the doctor onboarding to be completed.
Thank you, Dr. Abhinay. That's helpful. And maybe just one final question. Dr. Bhaskar, what is the quantum of investment for acquiring that 64% stake in Somdat Finance? And would that lead to any increase in pledging in KIMS?
No, it is only 20 crores, 22 crores total, both put together, myself and my cousin. And we have not taken any pledge we have not used any shares to raise this fund.
Understood, sir. Thank you and all the best.
Thank you. We have our next question from the line of Pallavi Deshpande from Samiksha Capital. Please go ahead.
Yes, sir. Thank you for taking my question. Just wanted to understand in the Telangana cluster, what would be the number of doctors that were added additionally, and what were the existing numbers, since you mentioned that there was margin pressure due to that?
Margin pressure is because of the increase in manpower. That is largely the corporate cost. Doctor addition has not been more than 3 or 4 doctors, revenue contributing doctors in Telangana.
So just wanted to understand, like you said, that the capacity addition 1,500 beds coming up in the near future. So would you be adding the doctors just now for that addition? Would there be any excess?
We will not require to add any doctors upfront today. As and when the hospitals get operational, we will keep adding doctors. And it's also part of the capacity will be utilized because we're running short of capacity in the current facilities. So the current doctors are enough to handle a part of the occupancy there.
And sir, secondly, on the pricing side, like you mentioned, you don't want the hikes, but in terms of the mix, how much can the mix contribute to the pricing, ARPP increase on the next 2 to 3 year basis?
I'm sorry, could you please repeat the question? It's not very clear.
Yeah, so on the pricing side, how much can the mix change contribute to the ARPP annual increase? What kind of increase can we see due to a mix change over the next 2 to 3 years?
I think ARPOB will continue to grow at around 3 to 5% growth rate on a year-on-year basis. This could be a function of price hike, could be a function of case mix change and clinical case mix.
Sir, I'm just trying to understand, are we being conservative on this guidance? Because that would be just in line with inflation. And I think if the mix change is coming in, it should be a higher number than that.
Yeah, but there is also volume growth that, we are hoping that there will be more volume growth than price change. Then, historically we have delivered more than 5%, but, we've never modeled more than 3 to 5% because, just to keep some
Right, sir. Okay. Thank you, sir.
Thank you. We have our next question from the line of Binu Patiparampil from Elara Capital. Please go ahead.
Hi, good morning. Thanks for taking my question. First,
why have you stopped giving Andhra Pradesh assets mature and acquired separately? And is this going to be the way you report going forward, combined?
Yeah, we didn't see any need to further separate it because most of the hospitals, both acquired and mature, have reached healthy EBITDA margins. The growth profile has been quite stable. Occupancies have been stable. So we didn't just want to create more confusion by dividing it. And that's why we had consolidated into Telangana, Andhra, Sunshine and Nagpur. And as Sunshine matures, we will consolidate that into Telangana. So that was the thought process. But if there is request for data to be made available, we can do that.
Okay. Going forward on ongoing basis, you will be reporting this combined.
As and when these hospitals start maturing, we will consolidate them into those clusters.
Okay. Second, I'm looking at your Telangana numbers. YOY compared to Q1 FY23, the occupancy has come down from 74% to 71% in Q1 FY24. What has led to this?
Sorry, could you please repeat the question again?
In your Telangana cluster, occupancy level has come down from 74% to 71% YOY.
Yeah, if you look at if you actually look at the IP volume, there is a 10% or 7-8% growth from a Y-on-Y basis. It is because the length of stay has come down from 4.3 to 3.9. That's why you're seeing a dip in the occupancy. So the real indicator would actually be the growth in IP volume versus occupancy or ARPOB.
Understood. Okay. And finally, just following up, what Nikhil Mathur was saying, it would be great. Earlier you used to give a slide about the upcoming projects and timelines. Would be great if you consistently give that in your presentation.
Sure.
Thank you.
Does that answer your question, sir?
Yes. Thank you very much.
Thank you. We'll take our last question from the line of Namit Arora from InGrowth Capital. Request you to ask 2 questions, sir.
Yeah, thank you for the opportunity and thank you, Rahul, for hosting this call. My first question is to Dr. Bhaskar and Dr. Abhinay. You clearly have a lot going on, both in terms of organic and inorganic, and obviously there's been a lot of success. But do you feel the need to augment the senior leadership team at a group level, either as a chief operating officer or just augmenting the bandwidth, given that there is a lot going on? Number one. And then my second question was that going forward, would you be now in a phase of sort of digesting and integrating and executing all the initiatives that you've launched, or will you continue to look at acquisition opportunities selectively or new greenfield organic efforts as well? Will that process continue, or do you think you already have enough on your plate? Thank you very much.
As far as senior leadership is concerned, I think what we currently have, which is Andhra, Telangana, Sunshine and Nagpur, the team is more or less in place. Things are pretty much in auto mode. Our bandwidth consumption for that is significantly low, except for onboarding new doctors on a day-to-day operations where hardly our bandwidth gets consumed. Most of the expansion is where our focus is. But again, there is an operating team because these hospitals are not operational. The team hasn't joined us yet. But at the right time, we will onboard the team and we will showcase the organogram in each of those clusters. So we're pretty confident that with the new team joining, we will not have any bandwidth constraints. As far as does that answer your question on the bandwidth?
Yeah, very, very comprehensively. Thank you.
Thank you. As there are no further questions, I now hand the conference over to the management for closing comments.
Thank you very much for the good questions that you people ask, so that it will able to excite us to build little better. And as you all know that KIMS is also an affordable quality care. We are all keep mentioning that all these years in tier 2 and where we can able to do only the primary, secondary and low-end tertiary care, whereas in tier 1 cities we are doing about high-end quaternary and high-end tertiary and quaternary care. Now with so much of consultants that are available in the districts itself, we are trying to strengthen the existing hospitals by creating a high-end tertiary care like advanced gastro, women and child, and oncology units and all those things that will able to give some growth. And it is a continuous journey in the next 3 to 5 years of going organic and inorganic growth. That's why there will be a little bit of fluctuations of the EBITDA and all, but we will expect a continuous growth on the top line and bottom line. That is one. And also, we are not very averse of the government schemes. Our aim is to provide a good quality care to each and every person. When there are many other small hospitals are coming and nearby to that government scheme patients, they will go there. That's why they keep coming down. And the other important thing is as far as the organogram is concerned, I feel the entire healthcare is mostly driven by the doctors, very good fashion doctors who can able to select. Then the management will be not a very big issue. The other important thing, a lot of concern on all of you somebody has pointed out also, the finance company. We have only invested about 22 crores and that's all our personnel to help one of my cousin. And I am nowhere concerned spend any time on that. The entire professional team we are going to take it. It is a slow growth on its own. So I don't need to spend much of our time and other things. So to clarify more and more, there is nothing to do. My entire dedication, passion, commitment for lifelong will be for the KIMS hospitals. And whatever we do to improvise and with all these things of your investments in this company, as I mentioned in the patient care, small hospitals in Tier 2 and Tier 3 places, where we could able to provide a very good quality care. Otherwise, not many chains that can able to provide this type of Tier 2, Tier 3. That is a big satisfaction for you as well as for me. We are in this space. Thank you very much for patient hearing and satisfied with all our answers.
Thank you, sir. On behalf of IIFL Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.